Welcome back. So equities cannot make up their mind. Let's figure out what's happening in commodities. We have Manisha in the studio now. Earlier, we were talking about the fall in oil prices with this ceasefire agreement. Manisha, is it still oil or are you looking at something else now?
Well, I'm looking at the crude oil prices because, after that 5% gain in the previous week, you thought that perhaps the crude prices will see some stability right now. But no, that is not the case. Monday was 3% down. Yesterday was another percentage point of a decline. And today as well, we're trading very flat into the markets. So we are trading on the lower side of the range when it comes to the crude oil prices. 68 just about holding for WTI, and from a high of almost $75.50 for the Brent prices, we are holding around 72 onto that one as well. Well, the biggest view comes in from Israel and Hezbollah ceasefire. That accord begins from today. There have been statements from various levels, and Biden also has done a press conference on this one. So we have seen that impact come in for the prices there. Apart from that, the second thing really is about the OPEC, which may further delay planned output hike due from 1st of Jan. If they do that, this is going to be a third straight time that OPEC and allies cannot make up their mind, and they are postponing hike in output. So that also continues to weigh onto the markets. Even with what they're doing right now, if you look at the world market, it has 8 million barrels per day of a spare capacity. I mean, that's as bearish as it gets for the prices going forward. Now, for 2025, and this report is coming from Bank of America, it says that there is no case really for the crude oil prices going higher because the non-OPEC supply is expected to rise by 1.4 million barrels per day in the next year. They also expect that the OPEC and allies will perhaps reinstate 2.2 million barrels. That would come in from that. And then that would mean a surplus of 800,000 barrels per day in 2025. Add to that the fact that the new U.S. president, when he takes chair in the month of January in 2025, could be coming out with various views and steps when it comes to crude oil. One, the export permits for the new LNG projects is something that could come in. Apart from that, increasing oil drilling off U.S. coast and on federal lands is another thing that could be allowed. And the third thing is new funding for replenishing the SPR. These three things is what the markets believe that Trump will do in the first week of January itself as he takes over. And this is also going to be bearish for prices. In the meanwhile, while we are looking at 25% tariff from U.S. on Mexico and Canada, for Canada, it would mean a big number breaker there because 4 million barrels per day of an import from Canada of crude is what U.S. does. How is that going to be impacted is something that the street will look at. The second thing is the U.S. inventories, which was also declined by 5 million barrels per day in the previous week. So these couple of factors are kind of supporting the prices, but not as much. So when it comes to 2025, the Bank of America predicts that for next year, you could be looking at Brent averaging at 65 and WTI at 61. So much lower than what we've seen in the prices in this year. So further bearishness could continue.
Okay, well, we'll not complain if we see 60 to 65 on oil prices. Manisha, thank you so much for that.